The Nightly Business Report.
Good evening. Tonight, Sri Lanka's Local Assemblers Association has raised concerns over the government's decision to resume imports of completely built units from February of next year. In order to digitize the nation, President Anurukumar Dissanayake underlined the value of expert assistance. In his capacity as Minister of Digital Economic Affairs, he pledged his dedication to this goal. The market had an upward trend on the week's last trading day, with the S&P SL20 and ASPI both maintaining their weekly gains. And US stocks dropped as investors awaited today's jobs report, with shares of health and technology seeing particularly sharp declines.
From Studio 24, here's Anuradhi Vikramasinghe.
A very good evening and thank you for joining us. The local assembly industry, governed by the Ministry of Industry's standard operating procedures, consists of over 17 assembly plants producing motor cars, SUVs, motorcycles, electric three-wheelers and both light and heavy trucks.
The local assembly industry is supported by a network of component manufacturers producing vital parts such as batteries, tires, bumpers, exhaust systems, seats, plastic and composite parts, via harnesses, rubber components and metal components. During the temporary suspension of vehicle imports, many local component manufacturers have hired over 5,000 technically qualified employees, including students and on-the-job trainees, contributing significantly to the country's human capital development. This thriving industry has also indirectly created over 10,000 jobs in the past 5 years, fostering a comprehensive ecosystem. However, this progress is at risk if unregulated imports are permitted, potentially undermining all the advancements made. While the standard operating procedure was established as a government policy to promote local industries, the president of the Local Assemblers Association warned that the decision to allow completely built unit imports could discourage over 20 local assembly plants of international brands operating in Sri Lanka, threatening the growth of the local sector.
President Anurukumar Dissanayake emphasized the importance of professional support in digitizing the country. He assured his commitment to this vision as the Minister of Digital Economic Affairs.
President Anurukumar Dissanayake emphasized the importance of digitalization in enhancing economic efficiency and advancing the country's economy. Addressing officials of the Ministry of Digital Economic Affairs, he outlined the government's primary objectives of poverty eradication, transforming social attitudes, and promoting digitalization. He stressed the development cannot be achieved through construction alone, reflecting on the past when the focus was solely on building infrastructure. The president also pointed out the lack of education reforms despite the focus on construction in discussions with education authorities. He highlighted the inefficiency of the Ministry of Labour's large buildings, emphasizing the need of digitalization to improve public services. The ministry has set a goal to generate $15 billion from the digital economy and increase the digital workforce to 200,000 in the next 5 years.
Sri Lanka Tourism Promotion Bureau with the Embassy of Sri Lanka in Warsaw was the partner country at the 30th TT Warsaw held from November 29th to the 1st of December.
Sri Lanka's participation as the partner country at the 30th TT Warsaw held from the 29th of November to the 1st of December this year provided an excellent opportunity to promote the island as a leading tourist destination in the European market. This prestigious status allows Sri Lanka to gain increased visibility, fostering greater publicity and the business interactions at one of the largest and most important travel and tourism exhibitions in Poland and Central. This prestigious status allows Sri Lanka to gain increased visibility, fostering greater publicity and business interactions at one of the largest and most important travel tourism exhibitions in Poland and Central Europe. Sri Lanka has been a part of the event since its inception in 1993, and after a 4-year hiatus, this year's participation marked a significant return. The Sri Lankan delegation, led by the Sri Lankan Tourism Promotion Bureau, included 10 prominent tour operators and travel companies such as Tropical Asia Tours, Jetwin Travels, Jetwin Hotels, Riverba Holidays Limited, Serendip Travel Holidays, Oriental Travel and Tours, Deluxe Holidays, Ocean Gate Travels and Tours, and Mazarine Surf Beach Hotel. These companies showcased a variety of tourist products and services, aiming to position Sri Lanka as a prominent and attractive destination for European travelers.
The Palm Oil Industry Association of Sri Lanka renewed its call yesterday for the government to lift the ban on oil palm cultivation, highlighting its economical, environmental and strategic benefits during the association's 5th annual general meeting.
The Palm Oil Industry Association of Sri Lanka renewed its call for the government to lift the ban on palm oil cultivation, which was imposed in April 2021 by former President Gotabaya Rajapaksa. The ban, based on a 2018 Central Environment Authority report, claimed that oil palm cultivation had adverse environmental impacts and mandated that cultivation be phased out over 10 years. However, following urgent requests from confectioners who rely on palm oil as a key ingredient, licensed imports were allowed in the same year. At the association's 5th annual general meeting, Dr. Fernando emphasized that oil palm cultivation could significantly alleviate poverty by creating jobs in farming, processing, and distribution while reducing the country's dependence on important oils. The AGM discussions also addressed the unfounded allegations against oil palm and highlighted the need to strengthen the functions of the POIASL. The meeting concluded with optimism as the association expressed hope that the new political administration would take the necessary steps to lift the ban and encourage replanting as previously promised.
Let's take a short break now. This is the Nightly Business Report. Welcome back to the Nightly Business Report. On the final trading day of the week, the market showed an upward trend, with both the S&P SL20 and ASPI continuing to sustain their gains throughout the week. For further insights, we speak with Vinodini Rajapubati from First Capital Holdings.
Thank you. The Colombo Stock Exchange extended its positive sentiment for the 9th consecutive session, with interest visible on the plantation and food, beverage and tobacco sector stocks, including Agarapattana Plantations, Kotagala Plantations and Lanka Milk Foods. Additionally, specific stocks in the construction sector such as Access Engineering and Tokyo Cements continued to attract investor interest throughout the day, while participation in the banking sector declined during the trading session. Amidst the increased participation from retail investors, the ASPI closed in the green zone at 13,613, gaining 54 points. Meanwhile, the market turnover stood at 5 billion rupees, marking a 35% increase from the monthly average. The top 3 gainers for the day were Kotagala Plantations, UB Finance and Agarapattana Plantations. Meanwhile, the top 3 losers for the day were Nation Lanka Finance, HNB Finance, voting and non-voting.
Positive investor optimism and stability were reflected in the market's upward trend this week, which saw the S&P SL20 and ASPI maintain their gains. For further insights on this, we speak with Manusha Kandanarachi from First Capital Holdings.
Thank you. This week, the stock market achieved a significant milestone as the ASPI surpassed the 13,500 mark, reaching its all-time high and closed at 13,512 on 4th December 2024. This follows its all-time high reached back in 18th January 2022 as well. When it comes to week at a glance, the Colombo Bourse experienced a week marked by significant bullish market sentiment, with the ASPI showing gains throughout the week, halting the week on a positive note. Throughout the week, the ASPI moved from 13,229 to high of 13,613, marking a net gain of 384 points. Turnover fluctuated, recorded between 2 billion to 5 billion throughout the week. The highest turnover was recorded on Wednesday, reaching LKR 5.2 billion, largely driven by banking and food, beverage and tobacco sectors, which consistently led the turnover contributions throughout the week. Despite the bullish trend, foreign investors showed a trend of net outflows across the week, signaling a cautious approach to external investments. Top contributors to the index included major blue chip and banking sector stocks like Haley's, John Keells Holdings, Commercial Bank and Sampath Bank, with increased interest seen in selected stocks from capital goods, diversified financials, constructions and materials sector as well.
Gold prices edged higher today but were on track for a second consecutive week of decline as investors awaited key U.S. payrolls data. Spot gold rose 0.2% to $2,638.45 per ounce, while U.S. gold futures increased 0.5% to $2,660.50. The precious metal has been under pressure this week due to uncertainty over the Federal Reserve's interest rate policy. Market participants are closely watching the U.S. jobs report as it could impact expectations for future rate cuts. Strong payrolls data could reduce the likelihood for further rate cuts, potentially weighing on gold prices. Despite this, gold remains a popular safe haven asset amid ongoing inflation concerns and global economic uncertainty. Oil prices fell in Asian trade today and were set for a middling week after the OPEC Plus extended its current run of supply cuts until well into 2025, highlighting increased concerns over slowing demand. Brent oil futures expiring in February fell 0.4% to $71.80 a barrel, while West Texas Intermediate crude futures fell 0.4% to $67.67 a barrel. Both contracts were set to end the week mostly unchanged. Oil's middling weekly performance also came after mixed U.S. inventory data pushed up concerns over slowing demand going into the winter season. But traders kept some risk premium in the market as tensions between Israel and Hezbollah remained high despite a recent ceasefire. The Sri Lankan rupee appreciated slightly against the US dollar today compared to yesterday. According to the Central Bank of Sri Lanka, both the buying and selling rates of the US dollar have decreased marginally. Let's now take a look at how the Sri Lankan rupee is performing against other global currencies. A short break now. This is the Nightly Business Report. Welcome back to the Nightly Business Report. Lanka Pay's digital transactions surpassed Sri Lanka's GDP, with nearly half of the nation's economic output processed through its real-time interbank fund transfers.
Lanka Pay's digital transaction exceeded Sri Lanka's gross domestic product last year, showcasing the significant impact of digital financial systems on the economy. By routing most domestic transactions through its local network, Lanka Pay reduces reliance on international payment systems, keeping financial flows with Sri Lanka and saving billions in fees. The shift from cash also brings substantial savings, cutting costs associated with currency printing, distribution and security, which amounts to around 1.5% of the gross domestic product. This is comparable to the 2% of the GDP allocated to the entire education sector. Transition into digital transactions could save the country billions, providing an opportunity to reallocate funds towards social benefits.
Lanka Hospitals Corporation has appointed Dr. M. Nilapul Pereira as the new group chairman. He succeeds Dr. Bandula Vijayasariwardena, who resigned from the position. Dr. Pereira, a consultant neurologist with over 18 years of clinical experience, has been a strong advocate for advancing patient care and institutional excellence. He holds MBBS and Doctor of Medicine qualifications from the University of Colombo and is a board-certified consultant in neurology. The company made the announcement in a filing to the stock exchange. Dr. Pereira's appointment is expected to further strengthen Lanka Hospital's leadership in healthcare. The company is optimistic about his contributions to its continued growth and success. ATG Handcare Private Limited in Vatupitiwala achieved a significant milestone, securing the LEED and ISO 5000 certifications for its sustainability efforts.
ATG Handcare Private Limited in Vatupitiwala achieved the prestigious LEED V4.1 certification under the Operations and Maintenance Existing Buildings category, recognizing its exceptional sustainability efforts. LEED, offered by the U.S. Green Building Council, is the world's leading green building certification program. The certification highlights key improvements in sustainability, including a 5% reduction in monthly electricity consumption and a 6% decrease in water usage per pair of liners produced. The company also enhanced its waste management practices, recycling up to 90% of production waste, significantly reducing its carbon footprint. Additionally, ATG Handcare installed an advanced ventilation system to improve air quality in production and administrative areas. The company also achieved a 5.5% reduction in greenhouse gas emissions, aligning with its commitment to environmental sustainability.
CBL Global Foods Limited and the United States Agency for International Development have launched a comprehensive handbook on best practices in coconut cultivation to support Sri Lanka's coconut industry. The initiative, part of USAID's Catalyze Private Sector Development Activities Food Solutions Program, aims to address productivity challenges and improve the livelihoods of farming communities. The program will also help bridge the supply gap by increasing productivity and enhancing market access for farmers. Sri Lanka's coconut sector currently produces 3,000 million nuts annually, falling short of the 4,500 million required to meet domestic demand and export potential. The handbook introduces advanced farming techniques to tackle issues such as low yields, water stress, and pest management. This collaboration is expected to boost the coconut industry's sustainability and growth. The Association of Public Finance Accountants of Sri Lanka recognized public sector financial excellence at the 8th Annual Best Report and Accounts Awards held at the DMICH. This year's competition, evaluating financial accounts from 2023, received a record-breaking 264 entries. The awards aim to enhance public financial management in Sri Lanka by promoting transparency and accountability in financial reporting. The competition featured 12 categories encompassing both central and local government institutions. Evaluation criteria included adherence to Ministry of Finance circulars and compliance with Sri Lanka public sector accounting standards. The event highlighted the commitment of public sector institutions to exemplary financial reporting. Let's take a short commercial break. Global business updates coming on the other side. This is the Nightly Business Report. Welcome back to the Nightly Business Report. Asian stocks mostly fell today following losses on Wall Street and ahead of key US jobs data. South Korea's Kospi index was hit hardest, plunging 1.6% after a 1% drop in the previous session amid increased volatility following President Yoon Suk-yeol's revocation of martial law imposition. Japan's Nikkei 225 dropped 0.9% and the Topix index fell 0.7%. Meanwhile, Malaysia's FTSE Malaysia KLCI and Australia's S&P ASX 200 declined by 0.3% and 0.5% respectively, reflecting broader market uncertainty. In contrast, Chinese markets saw gains, with the Shanghai Composite rising 0.9%, the Shanghai Shenzhen CSI 300 climbing 1.1%, and Hong Kong's Hang Seng Index surging 1.2%. Today, the U.S. investors awaited a jobs report as U.S. stocks fell, with a notable drop in shares of technology and health.
U.S. stocks ended lower on Thursday, with United Health Group down sharply and technology shares easing. The Dow shed more than 0.5%. The S&P 500 and NASDAQ each lost about 0.2%. The declines come just one day after all three indexes notched record-closing highs. Among individual movers, shares of United Health Group dropped more than 5% and were the biggest weight on the Dow and S&P 500. Shares of Cigna and Molina Healthcare also fell. Health insurance companies are reassessing the risks for their top executives the day after the murder of United Healthcare CEO Brian Thompson in Manhattan. United Healthcare is part of United Health Group. Shares of Synopsys fell more than 12% after the chip design software firm forecast fiscal 2025 revenue below Wall Street expectations, in part due to a slump in China sales. And cryptocurrency and blockchain-related stocks lost steam after Bitcoin fell below the $100,000 level after eclipsing it for the first time ever earlier in the day. MicroStrategy, the largest corporate holder of Bitcoin, ended down nearly 5%. Investors now turn their attention to Friday's monthly non-farm payrolls report for clues on the Federal Reserve's next policy moves.
The limitations of the European Union's EV tax plan, which does not apply to hybrid cars, have been made clear by the increase in Chinese automakers' shipments of hybrid vehicles to Europe.
Chinese automakers have ramped up exports of hybrid vehicles to Europe, and they plan on sending more models to the key market. The move exposes the limits of the European Union's electric vehicle tariff scheme. It aims to protect its auto industry from cheap Chinese imports, but the tariffs don't apply to hybrid cars. Analysts say they could see major brands like China's top EV maker BYD continue expansion in the region. Some manufacturers are also shifting production and assembly to Europe to lower costs around tariffs. One leading analyst expects China's hybrid exports to Europe to grow by a fifth in 2024 and even faster next year. EU tariffs of up to 45.3% on Chinese EV imports came into effect in late October. The bloc wants to counter what the European Commission calls unfair subsidies that helped create spare production capacity in China. Data shows the anti-subsidy investigations have led some Chinese automakers to change their European strategy to focus more on hybrid exports. Hybrids have gained in popularity as buyers consider them an affordable compromise between all combustion and all electric. A Chinese trade body calculates hybrid exports to Europe more than tripled to 65,800 units from the same period a year earlier, between July to October. It reverses a trend of sliding sales until earlier this year and in 2023. Exports of plug-in hybrids and conventional hybrids made up 18% of China's total vehicle sales to Europe in the third quarter, double the number of the first quarter. The proportion of EV shipments fell by 4% during the same period. Some analysts believe the trend is likely to gain further momentum. They say China has stepped up its export drive to address overcapacity at home. The US and Canada has put 100% tariffs on Chinese-made EVs, which makes Europe a more obvious outlet for Chinese automakers. The European Commission did not immediately reply to a request for comment on rising hybrid imports from China. However, rising exports from China could trigger intense price competition in Europe's hybrid vehicle market. But some experts caution Chinese firms are likely to tread more carefully for fear of causing another round of EU tariffs.
Well, that's all from us here at the Nightly Business Report for this week. We'll see you again on Monday with the latest updates across the business globe. Until then, I'm Anuradhi Vikramasinghe. Thank you very much for watching. Have a great weekend.